Let's begin with the markets, guys, and on track to erase that post-Fed rally. This is what the Fed chair said yesterday about how far the Fed must go to successfully combat inflation.
I think we'll know when we get there, really. I mean, honestly, that would be, you would have positive real rates, I think, and inflation coming down by then. I think you'd have positive real rates across the curve. I think that the neutral rate is pretty low these days. So I would think it would, but you know what? We're going to find that out empirically. We're not going to be completely model driven about this. We're going to be looking at this, keeping our eyes open and reacting to incoming data, both on financial conditions and on what's happening in the economy.
One of the more interesting points he made, Jim, was that headline is what consumers feel, and that's leading a lot of people to say oil is the key. Nat gas in Europe today explains a lot.
Yeah, look, nat gas in Europe is a function of that Freeport facility that yesterday that David talked about, because that looks like it's going to be a longer outage, by the way.
Yeah. Well, end of the year potentially.
Yeah, end of the year.
For some, not all of them.
Right. I think a lot of us puzzle over the following. How could there be such voracious, furious buying in the last hour, and then beginning at 4 a.m., remarkable unwind? What happened? Who was wrong? Were the buyers wrong, or the sellers going to be wrong? Now, I come back and say that there were a lot of people who were instantly saying, you know what, he means business, 75. And then in second thought, people just said, you know what, if we parse it, yeah, he says, well, maybe 50, maybe 70. He never said what you really want, which is, look, I will favor jobless. I favor unemployment over inflation. I want people to stop being able to job hop, stop being able to get raises, and get laid off. Now, Jay Powell's not that kind of guy, so that's a very hard thing for him to say. So, Carl, what I see when he speaks is it troubles him to say what he has to do, which is favor capital over labor. It just troubles him. And I think what a lot of people are thinking about is he can no longer be troubled. What he has to just say is, listen, I got to go all in, people get fired, all in layoffs, and that's going to do it until we get some sort of resolution oil and some sort of resolution food and some sort of resolution supply chain. He just was unwilling, except for right at the end when he said a young couple should be more concerned. He's got to bite the bullet.
Well, the median year-end dot plot has gone from 1.9 to 3.4. I mean, they've gotten more aggressive.
Well, that's what I thought, and that's why I thought that people bought. And then there's just too many people who feel, you know what, the heck with the dot plot, let's go all Volcker. I'm looking for a 94 scenario, which is that there are multiple rate hikes, and it works. 3 to 6, and it works. David, I think there's a lot of people this morning who have remorse and say, you know what, we have to sell tech. That's a whole other issue, but we have to sell everything, bonds, stocks, because he's a failed Fed chief. And I heard almost everyone this morning called him a failed Fed chief.
Really? It's gotten that far?
Yes, I think it has.
That there is this label being appended to his tenure?
Well, I'm not buying that, but yes.
No, I know you're not. Things turned this last night, right? I mean, there
turned at 4 a.m., which is Europe, right?
There's been a story that I've heard now a couple of times. You know, the Swiss, we pointed out, raising rates. Do you know the Swiss National Bank owned $177 billion in U.S. stocks?
Yeah?
Yeah, including a lot of tech stocks.
Oh, my God. They're like Tiger Global.
No, I don't. You know, they changed their language on a potential currency intervention.
Hey, David,
They dropped the one-sided commitment to guard against currency depreciation, right? The Swiss have been very focused on keeping the franc strong. Right. But there is, and we won't know, but there is a question as to whether or not the Swiss National Bank, with that $177 billion in U.S. stock, may now proceed to start to sell some to keep the Swiss franc stronger.
Holy cow. Okay, so let's say that's true.
By the way, don't know.
No.
But I've heard it now from 3 separate people this morning asking the question.
No, but what's interesting is that the stocks that got hit the hardest between 4 and 5 a.m. were FANG.
They were.
FANG and a couple semis.
I mean,
but isn't that the most obvious?
Take a look at the Swiss National Bank's 13F.
Look at the ones you isolated, the ones that are most visible. Yeah. If you're not selling Carvana if you're from, you didn't buy Airbnb.
No, they own a lot of Apple.
This is what they own.
Yeah, it is.
David, that makes so much sense.
Don't know if it's again,
But
the idea would be that you're actually selling to make sure you keep the franc stronger.
Well, they sell whatever they have, right?
But I don't know. I'm not sure what's going on, Jim.
See, Carl, when I was watching the sell-up, and I said to myself, okay, so they're not selling Walmart.
But by the way, by raising rates, you're already your currency is you're helping your currency. So it's not clear to me exactly.
Well, I could think that they know what they're doing any more than anybody else.
I don't know. Anyway.
But I
the
just
idea
think,
that the Swiss
but
National
I was
Bank
puzzling over
selling.
why these stocks, the most name brand visible stocks, you should include Intel there too, and these were the name brand guys, and then the rest of the market was not going down. So I'm trying to think, who is really unloading? Is it someone painting the tape? No, not at 4 a.m. Those guys are too lazy. What it really is there's an aggressive seller in the marketplace, but I lacked anybody who could be that seller. And you may have answered the puzzle.